Well, let's go talking markets now. The market is down 0.06%. Gainers, Nigerian Police Force Microfinance Bank, NIMET, we have Etana or we have WAPIC, NGX Group, Losers PZ Industries, we have Chi PLC, FTN Cocoa, Champion Berries, and Academy Press. I'm being joined by Mr. Jamiu Mohammed via Zoom to discuss markets. Mr. Mohammed, thank you so much for your time. Mr. Mohammed, can you hear me?
Yes, I can hear you. It's a pleasure to be here with you on the program.
Yes, so let's talk about today's figure. The market is down.
And actually, the market closed positive very at the nick of time. So that isn't why you don't have that information. The official information is that market closed is 0.7%. And that's not connected with the gain of 3.3% that we witnessed in the Airtel. You know, Airtel was the one that brought the market down yesterday. And you know the market, the way our index is being structured. The index is a value-weighted index. And a value-weighted index is a big cash stock that always brings it down. So whichever way these stocks move, the big cash stock move the way the index moves.
So let's look at some stocks here making headways here. We have the gainers today. WAPIC, NGX Group, Etana, or was there any change with regards to the gainers and losers?
Yes, there is no major gain. And if you look at the market breadth close negative. The breadth is the number, market breadth is the number of gainers compared to the number of losers. And we have about 16 gainers against 18 losers as we speak. And despite that, the market closed in the green, just because of what I've told you earlier. And if you look at the index, still around 51,222, and gain is 0.7% during the day. We have about 195 million units of shares traded in the market today. And the worth of those shares traders is around 7.4 billion, and this is one of the activities you are expecting in the market, if you can see. And the major contributor to this value traded in the market, I think the Bua Cement alone traded more than 2 billion in the market. A single stock alone traded more than 30% of the total value traded in the market. So these activities is being driven majorly by Bua Cement. The Bua Cement traded about 30 million units of the share traded, though the price didn't change. So as we know, as we move into the new year, you can see that the gain gotten from first 2 days of the market opening in the year was eroded yesterday because of the fact that Airtel Africa lost yesterday, and it lost about 9%. So the gain has been eroded, but as we speak today, we have moved into the positive region, and we believe that it may likely continue, though we may witness a kind of slow gain in the first quarter of the year because of the fact that the implementation of the budget has been implementation of budget for 2022 has been extended further to 2023. So the budget of 2023 is not going to be implemented on time. The policymakers are still looking at what is likely to happen, both fiscal and monetary policy. So these things drags a bit and affect the macroeconomic variables that affect the market. So this thing we may likely witness a kind of slow growth in the market in the first quarter of the year, even though we know the market, the annual result that we are expecting in the market is going to be good, but it won't come before the end of the first quarter. It starts to come in by April 1st, and that's the audited report of every company. Though they must have released their fourth quarter report according to the new rule that anybody that wants to release the audited report.
Mr. Jamiu, allow me to interject you. We'll take a break and we'll continue this discussion. We'll still have some 5 minutes to discuss. So let's take this break and continue this our discussion, please. I thank you for staying with us, Mr. Jamiu Mohammed. He is there. We are talking markets. Mr. Mohammed, while you conclude on your submission before we went on that break, I want you to also talk around economic issues, economic factors and variables that are affecting trading at the NGX. How is all of this inflation, FX issues, growth issues, are they affecting trading in general?
Thank you. As I was speaking to you,
yes.
We have one of those figure, one of those macroeconomic variables that affect the market is exchange rate. Whenever you have exchange rate, it's not only the exchange rate that is the problem in our market, but the policy around the exchange rate policy is what is affecting the market. If all the windows, different kind of windows in FX market is being closed or is being united, brought together, unified one, yes, that will have a single rate that affect that we can exchange, which is the exchange rate for us. It will give foreign investors to be able to come into our market because it gives them the leverage or the easy way to come in and go out. And if an investor looks at an exchange rate policy and realize that he only gives room for you to come in, but he doesn't give room for them to repatriate whatever profit they gain from their portfolio, definitely they won't come into that. And if you see, before now, when our markets used to experience a kind of large volume that we ought to experience, it's being largely played by foreign investors. So exchange rate is policy is one of the variables that affect our market. So also inflation rate. Inflation rate also affect the market, and it also made us to determine whatever acceptable rate of return that you want to get in the market. If inflation rate as we speak today is still around the 20%, 22% as we speak today, and the market is just as like if I look at the year-end year to date return in the market was around 17%, around 20%. Sorry. So what it means is that the inflation rate will make the investor to look at what an investment vehicle or what an investment instrument that he can use to get a return that is cover that inflation aspect of his investment. But if there's none, then there's a problem. An investor will cease to be happy with what happening in the market. So these are the variables that happen in the market. And whenever the policymakers, both fiscal and monetary, have not started giving or reading out this policy and figures, it will drag the activity in the market. You will begin to see that the growth is as expected in the market won't come in time. But as we go into the next quarter, we begin to see figures from the listed company by giving down their annual report. And if you look at what we are expecting, we believe that many of them may likely surpass what they reported last year. So those are the things that we think will drag the market for now. But it doesn't mean that our market will continue to fall. No. But the advice I will give to investors is that they should always look for the fundamentally sound stock, that fundamentally sound stock of listed companies, that even though they cannot get immediate return, you can wait for a while and get their profits that they intend to have on their investment.
Now let's see if we can close this discussion around activities of the fixed income space. There used to be a time where many were thinking that some were moving from the equities market and shifting focus to the fixed income space. What is playing out in that space now, Mr. Mohammed? How attractive is that market?
As I've said earlier, there's no attractiveness in that space because of the fact that anybody that invests in fixed income market, yes, is real return is negative because of the fact that there's that inflation. So the only return that can compensate for inflation is this our market, is stock market. You can gain up to 20. I told you market closed around 20% last year, and when the inflation rate is around 20%. So how can you go to a market that's giving you less than 10% rate of return when the inflation rate is above 20%? So anybody that's going there, we call such investor. Any investor that is going there, we call such investor passive investor. They are only interested the security of their investment. They are only interested, they are risk-free investors. They are risk-averse investors. They don't want to go into risky investment. And the only risky investment I can give you those short return is this stock market. And that is the only market that we can have. So anybody that's playing in that market is a passive investor, and is risk-free investor and is risk-averse investor, and is not ready to face the risk of going into stock market. That's just it.
Mr. Mohammed, on a final note now, I don't know, I just like your views if you're going to like to speak around the investment and securities bill that is supposed to, energize the market, of course, attract foreign investors into that market. What do you think of that bill?
Firstly, before I go into that, I will advise the policymaker to firstly unite all the FX window that we have, all the FX windows that we have. They should unify it to become, we should have a single regime of interest, foreign exchange rate. That will give investors and foreign investors to come into our market. And secondly, everybody has to return back, except from anyway, we cannot run away from the trader. But every investor should return back to fundamentals of investing in capital market, which is long-term investment. So the attitude of saying I invest today, I want to exit next week, or I want to exit next tomorrow, should be totally eliminated, except from one who are speculators. But in a situation whereby speculators are the one ruling the market, you see gain 1 or 2, 3 days, and you see some people rushing back to sell whatever they have just to have that short-term return within the. And if you look at, if you project this rate of return for speculator and also project the one that has long-term investment, but you realize that long-term investing is more profitable than this short investor. So in a short time and in a straight forward statement, let us go back to the fundamentals of investing, which is investing for long-term horizon.
I must thank you so much there, Mr. Jamiu Mohammed. We'll talk more about the bill some other time. Thank you so much. Do enjoy your weekend.
Thank you. You're welcome. I really appreciate it.